What if I told you that while everyone's fighting over MSTY and arguing about whether it's worth the risk, smart money is quietly collecting 80% plus yields from 5 hidden gems that most investors have never even heard of? In fact, there's a $50 billion secret happening right under Wall Street's nose. And by the end of this video, you'll have a complete roadmap to potentially turn $10,000 into over $800 in monthly income. But here's the thing. This isn't some get-rich-quick scheme. And I'm going to show you exactly why these 5 alternatives might be the smartest income play you're not making. Now, before we dive in, let me tell you why I'm qualified to show you this. Last month alone, my YieldMax portfolio generated $2,847 in dividends. I've been tracking these funds since their inception, and I've seen both the incredible highs and the brutal lows. Yes, MSTY is a solid fund and there's a reason it's popular. But it's honestly just the tip of the iceberg. What I'm about to show you goes much deeper than what most YouTubers are talking about, and I think you're going to be shocked at what you've been missing. But let's get the brutal truth out of the way first, because I don't want anyone going into this blind. When you're dealing with YieldMax ETFs that pay 100% plus yields, you need to understand exactly what's happening under the hood. These funds use covered call strategies and synthetic derivatives to generate income, which means they're writing options on the underlying stocks to collect premiums. The trade-off is simple. You're giving up some upside potential in exchange for consistent income payments. And here's the part that trips up a lot of new investors. When these funds pay out those massive distributions, your net asset value drops by the distribution amount. That's not a bug. It's a feature. Your total return combines both the income payments and any changes in the fund's price. The key is understanding that these are income-focused investments, not growth plays. If you want maximum capital appreciation, these aren't for you. But if you want to turn volatile stocks into income-generating machines, then pay attention because this is about to get interesting. But before I reveal these 5 income goldmines, smash that subscribe button and hit the bell icon because you're about to learn strategies that most financial advisors will never tell you. Let me tell you about the first fund that's been flying under the radar. YieldMax Ultra Option Income Strategy ETF, ticker symbol ULTY. And I call this the diversification king. Imagine owning 30 high-growth stocks but getting paid weekly, like you have a part-time job, while MSTY puts all your eggs in one Bitcoin-adjacent basket with MicroStrategy. YOLTY spreads your risk across 15 to 30 underlying securities. This fund currently yields 81.45% and pays out weekly, which means if you invested $10,000, you'd be looking at roughly $67 in weekly payments. The genius of ULT is in its selection process. The sub-advisor picks stocks primarily based on their implied volatility levels, which means you're getting exposure to high-flying growth names like Tesla, Palantir, Nvidia, and Robinhood, plus some leveraged derivatives like ProShares QQQ. The sector diversification is impressive too. You've got technology leading the way, followed by financials, consumer cyclical, utilities, and consumer defensive. What makes this even more attractive is that ULT used to pay monthly but switched to weekly payments, and the income has been surprisingly stable for a YieldMax fund. The expense ratio sits at 1.3%, which is reasonable for this type of complex strategy. If you're nervous about betting everything on one stock like you do with MSTY, ULT gives you that diversification benefit while still delivering those juicy weekly income payments. The second fund is where things get really interesting. YieldMax PLTR, Option Income Strategy, ETF ticker symbol PLTY. And this is what I call the Palantir cash cow. Here's the situation. Palantir is one of the hottest growth stocks in the market right now, but it pays absolutely zero in dividends. Meanwhile, PLTY investors are collecting a 147.42% yield monthly from the exact same underlying exposure. Think about that for a second. Regular Palantir shareholders are sitting there hoping for stock price appreciation while PLTY holders are getting paid every single month. If you put $10,000 into PLTY, you're looking at roughly $1,474 in annual income from a stock that normally pays nothing. Now I have to be honest with you. PLTY's monthly payments have been extremely volatile, but they're trending upward as Palantir's stock performance has been strong. The expense ratio is 1.44%, and the fund has been crushing it lately because Palantir itself has been on a tear. This is definitely a higher risk play because you're concentrated in a single stock. But if you believe in Palantir's long-term prospects and want income while you wait, PLTY offers a compelling risk-reward ratio compared to just holding the stock directly. Our third fund might be the most exciting of all. YieldMax NVDA Option Income Strategy ETF ticker symbol NVDY, which I call the NVIDIA Income Machine. NVIDIA is arguably the most important stock in the world right now with the AI revolution, but its actual dividend yield is practically nothing. NVDY changes that game completely by offering a 138.2% yield based on NVIDIA's performance. This is how you turn the world's hottest stock into your personal ATM. The fund seeks current income first, then tries to replicate NVIDIA's share price returns. So if NVIDIA continues its upward trajectory, NVDY should benefit from both the income payments and underlying price appreciation. I won't sugarcoat this. NVDY's income payments have been super volatile, swinging like a pendulum based on NVIDIA's volatility and options premiums. But that's the game you play with these derivative strategies. The expense ratio is 1.27%, and the performance has been solid because NVIDIA has been performing well. If you want exposure to the AI boom but also want to collect income while you ride the wave, NVDY gives you both. Just remember, you're capping some upside potential in exchange for those monthly payments. Now here's where it gets really clever. The fourth fund is YieldMax Universe Fund of Option Income ETFs ticker symbol YMAX. And this is what I call the everything strategy. Why pick just one YieldMax fund when you can own them all? YMAX is essentially a fund of funds that invests in multiple YieldMax ETFs, giving you meta-diversification across their entire universe. The current yield is 70.14%, and it pays weekly, which means consistent cash flow every single week. The genius move here is that instead of trying to pick winners among YieldMax funds, you own all the heavy hitters, MSTY, NVDY, TSLY, and others all in one package. This used to be a monthly payer, but switched to weekly distributions. And while the payments have been volatile, that's expected with this type of strategy. The expense ratio is 1.28%, and if you're a YieldMax believer but want to spread your risk, this is probably your best starting point. Think of it as getting a 70% yield from a basket of funds that individually yield 80% or more. The fifth and final fund is YieldMax Magnificent 7 Fund of Option Income ETFs ticker symbol YMAG, and this is what I call the Magnificent 7 Goldmine. This fund focuses specifically on the MAG 7 tech stocks: Apple, Microsoft, Google, Amazon, Tesla, NVIDIA, and Meta. Instead of owning these stocks individually and getting minimal dividends, YMAG writes covered calls on all of them and distributes the income weekly at an 86.17% yield. The beauty of this approach is that you're betting on the future of technology while getting paid every week for the privilege. These are the companies driving the AI revolution, the cloud transformation, and the digital economy. YMAG used to pay monthly, but switched to weekly payments. And yes, the distributions have been volatile, but that's the nature of options-based income strategies. The expense ratio is 1.12%, which is actually the lowest of all the funds we've discussed. The performance has been solid because the MAG 7 stocks have been performing well, and I don't see that trend changing anytime soon. Technology is the future of investing, and YMAG lets you collect income from that future every single week. So how do you actually build a YieldMax empire? Here's my 25-25-25-25 rule for diversification. Start with YMAX or YMAG as your foundation since they give you built-in diversification, then gradually add individual stock ETFs like NVDY, PLTY, or ULT based on your conviction in specific companies. Don't put everything into one fund, no matter how attractive the yield looks. The key is understanding that this is an income strategy, not a growth strategy. You're trading some upside potential for consistent cash flow. If you started with $25,000 spread across these 4 strategies, you could potentially be looking at substantial monthly income. But remember that past performance doesn't guarantee future results, and these payments will fluctuate based on market conditions and volatility. Your next move starts right now. These kinds of yields won't last forever in any market environment, and the best time to start collecting income is today. I'd recommend beginning with YMAX for diversification, then adding the others based on your risk tolerance and conviction. Make sure you understand the risks, including NAV erosion and volatility, before investing any money you can't afford to lose. If you found this breakdown valuable, make sure to subscribe and hit that notification bell because next week I'm revealing a yield max strategy that could potentially pay daily dividends. And if you're ready to start collecting weekly paychecks from Wall Street instead of just hoping for stock price appreciation, drop a comment below with the word yield and let me know which of these 5 funds caught your attention the most. This video is for educational and informational purposes only. Investment performance shown is based on historical data and projections. Past performance doesn't guarantee future results. Always conduct your own research and consult with a qualified financial advisor before making any investment decisions. Thanks for watching.